All right, time now for Smart Charts with Abigail Doolittle, where we're going to take a look at timely topics through the charts. Abigail, you're taking a look at longer-term equity.
That we are, Roman. To do that with me is Steve Suttmeier, Bank of America Merrill Lynch, technical analyst. And Steve, you always like looking at these weekly charts, the longer-term charts. Why is that? It smooths out the picture?
I don't like noise, and the weekly charts reduce the noise. It's a good enough time frame where you can be timely enough, and it also, reflects the technicals and also fundamental. If you're going to make a fundamental view, it's going to be more intermediate term anyway. So I'm trying to cover all the bases here with the weekly charts, that's for sure.
Well, you have two great ones with you this week, always great ones, but right. I really, in particular, like these two. This first one, small cap value. Sure.
So on this chart, we're showing the similarities that we had in 2011, 2012 with the breakout for the Russell 1000 Value Index. So why we're looking at this, we're seeing rotation right now, and it's perfectly normal to get rotation in the market. And we think you get a rotation away from growth and into value names. So this value index breaking out on an absolute basis, it happened in late 2012, happened in late 2016, and it's happening right here, right now in late 2019. And why is this important? Because rotation is the lifeblood of a bull market. Mm-hmm. And what we're doing here is we're getting groups that haven't really performed coming to the forefront. So look at financials, industrials, and look at MSCI ACWI. Same chart pattern on those as well. So the market's rotating more towards cyclicals. And you're seeing the outperformance, stronger performance from MSCI ACWI with a breakout just like this. Mm-hmm. Financials are going to new highs just like this, and also the industrials index as well. So that's why we like it, and we think this can continue. It's very similar to that 2013-14 period, 17-18, and we think we're going to have another leg up.
So given that we're 10 years into the bull market, would you take this as a signal that we have like another year or so of good performance here for value over growth? But at the same time, since value is more defensively oriented, would you be looking at signs, if this breakout really continues, that could be a tell on the end of the bull market? Or do you think this is the bull market just going to keep on keeping on?
Well, we think it's a secular breakout from 2013, and our work suggests that can last another 10 years. So wow. What we got right here, right now is really just
20-year bull market. You heard it here first.
Well, think about it. 1950 breakout lasted until 66, 80 breakout lasted until 2000, 6 years into it, maybe another decade.
Okay.
But to me, it's just a value phase. I think growth, longer term, is still leadership. Mm-hmm. But I think we're going to maybe a year's worth of outperformance in value.
Well, supporting your growth view here is right. The idea that chips are actually about to start breaking out against software. So relatively quickly, talk to us about this.
Sure.
Another rotation.
Exactly. So a lot of people are looking at semiconductors right now as a group with bullish rotation versus the S&P, but that's not the only thing it's bullish against. It's actually bullish against software, which is basically the arrowhead of the growth trade. Semiconductor is a little bit more cyclical and a little bit more value-oriented. So semiconductors have lagged for many years. This chart going down shows the stocks lagging S&P 500 software and services. And you can see we pointed to those periods in 2012, 2016, and now on that past chart. But right now it looks like we're getting outperformance from semis. But more importantly, semis actually could break out of a 12-year base versus software and potentially be a longer-term leadership group relative to software. So the stocks look pretty good right now relative to software, and that's where the rotation in tech is, more towards semiconductors and hardware and away from software.
Well, that could certainly be a very valuable rotation to get in on if it occurs, and it looks like it's in the early stages.